Hi, this is Elliot Wave Sage. I want to go ahead and do a weekend video, and like always, this isn't a financial advice. Always do what's best for you. Use this video for your education and entertainment purposes. So, still no debt ceiling deal. In fact, on Friday we got news that Republicans had walked away from the table only after hours late last night to say, "Oh no, we're actually going to meet again." So expect these jerking around like news alerts to play with the market, maybe even manipulate the market, dare I say that. But I do believe this will continue. I do believe even there'll be on the other side at some point prepare for default. You'll get some message, talks have broke down, and I've told, Yellen and Powell they need to prepare for a default. And before deal's done. So you're gonna see I think that's how this is gonna happen. So if you're trying to like guess if a deal's gonna happen and when, I think it's good luck. And the news will be good and then it'll be bad. And ultimately my suspicion is they'll be playing this game, but then there'll be an accidental breach. What I mean by that is they think X day may be June 1st, first week of June. I'm willing to bet, based on how I'm watching the Treasury cash bleed out, you could wake up on a Monday or Tuesday and like, we're out of money, we screwed up. X day is today, or we ran out of money. Our figures were off, and it's like shit. We defaulted, and they're playing this game, and now there's a default, and then I think that will cause a lot of commotion in the markets, and then once you cross that Rubicon, then the political calculus changes, and in fact, if the market reaction isn't too catastrophic, you may see one or both sides even harden in a post default situation. So I think the only way that a deal gets done is if the markets can put pressure on the politicians. And right now they're not doing. It's not doing that. It's not doing that. And but that's what will get a deal done. Markets have to put pressure on the politicians to compromise. If there's no pressure, there's no deal. And right now there's no pressure. I mean, look what happened Friday. We got that bad news. Shit, the market sold off, and it's like, oh, never mind. Maybe we do want to negotiate this weekend. So you see how the markets definitely dictate, what both sides are doing, and we all know one side tends to be more in love with the indices than the other, and I'll just leave it at that. So now here it is. Unfortunately, though, no matter what happens, the market's predicting a catastrophe situation. We all think it's the debt ceiling, but it doesn't have to be. It could be some other event that just happens to be, taking place while we're dealing with this problem. But it does seem like debt ceiling related calamity is coming, but it could be something else. But so the SPY, just kind of updating, where we are. I got this ABC. We have 5 waves down here. So for W, you come up in 3 for another W, you come down in 3 for X, and now we have another, 5 up, 1, 2, 3, 4, 5 for A. You have your B, and now you're in your C wave. So we need 5 up. And if we really just take a look at where we are, you have a 1 and a 2, a 1, 2, your 3, a 3, 4, 5. This 3 top, now we're in 4. 4 could still take another swing lower, but I do think you need one more high, and that's why I'm thinking 425, 424 as the ultimate pivot, and that's where um, I would think the market will be under a lot of pressure and could turn. But what I'm looking for here is to finish this impulse is some divergence in this RSI here. You don't have it, but more than likely will continue to drift lower and then come up. And then once this 5th wave with divergence shows up, then it seems like the market is ready. Now, what if it just drops? Well, then you can make an argument you're still in the B wave, and then this is a 3, 3 flat. And that target here would be 400, but that would be a buy the dip, and I would take a long against 400 if we do a flat. So we really need this 4 and a 5 to confirm the top. If we just get a catastrophic drop, you need to be wary that you could be in B still, and then C comes after the debt ceiling's resolved or later in the summer for this final push higher. But I mean, right now, everything looks like this is where we're heading. Just keep an eye on this move. And my thinking is, what's the sign that that would happen? Well, I would say if we were to drop and go below 413, then I would be looking at that other scenario. So here, so if you're like really an aggressive trader, or want, you really want to try to long this market for some reason, I mean, this is 415.52 is a place to gamble, and I call it gambling because it is very risky right now to take a long position, but it can be lucrative if it plays out right. So this is kind of the thinking, and we'll see how this plays out and go from there. Now the triple Qs here again, an A, B, C for W. Here I have an A, B, C for W, and then an X, and then an A, B, C. I'm lowering my target on the Qs. 350, I think 344.42 is a better target for the top. And again, it needs a 4 and a 5 the way I have it here, like this. Now, I could be off by a swing. We could already be in this 4. Now this can't be a flat, it's too extended, so the odds of this just dumping slim. But again, maybe I'm not labeled every swing properly, so just keep an eye on that. But I do think this trend line that I have here, once this trend line breaks, then I think it's safe to say the top is in. So as long as this uptrend remains in place, the Nasdaq should continue to grind higher and frustrate bears until I believe we get to this kind of 344, 42 area and top out. IWM, I said this was kind of 182 was an extreme area for 2, but if you look here, we have 3 waves and it got a massive dump, so this could be already completed. We need to watch this and see how it plays out for now. But either way, if it takes a swing. And then the Dow Jones here, again, bigger picture, been very weak. WX, and we're going down in Y. Here you have another 3 waves, and then 3 and 3 and 3. So it's a lot of 3-wave movement here in this area. So it could be a lot of patterns. We could have another, within something like that. Very choppy. We could have this, and then it could bounce, right? And then it could go back down. So a very choppy environment in the Dow Jones. Something like that. Then watching the Hang Seng, and it did break this low, so this is more downside now in China, and if it breaks this low, we'll have a lot more downside. So I'm not too keen in buying the dip in China. This also may indicate dollar strength is still coming in the market. We'll have to wait and see. Now this looks like 3-3. It could still rip up higher and then dump, and the market again loves these flats, so it would love to do. And then in here it does something like here, 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 right, and then dump. It could easily do that. It doesn't have to just be done there. So Bitcoin, I still want to see more downside in Bitcoin and crypto. And the 25.4 to 24.7, somewhere in there. And then gold got a bid. This I said was a nice swing area. And if we're very lucky, it could be a swing low for new highs. It seems like the dynamic is gold higher, markets down. If that's the case, the markets are in trouble. But like I said, this could be a three-wave decline like that. So just keep that in mind. It's tough to say, but now that looks like a good pivot to trade against gold. And then silver is also finding support. And here's a three-wave structure finished here. And again, could do that. Could do that. The surprise, for me would be is if it's done, and then we start to go to our target of $30 to finish X out here. So we'll have to wait and see what happens, but I would definitely have stop losses at 23.20. Nat gas hit an area that I would have expected sellers. It did. So again, it has to overtake 3. If it can't, then it should make new lows for a final low, for a final buy for long-term investors here. We'll see what happens. Here you could see you have 3, 3, 3, and it should be ready for a drop. And the bond market, again, 2-year, I'm sorry, 10-year. Here we are again in this wave 2. Now if 2 can break this downtrend line, then the 4 is in, the actual 4 is in here, and we'll be going to new highs. But it's not likely given the way it bottomed. It would be unusual. And then the 2-year, as I mentioned before, got very close to our sell area and started to reverse, and that's when the indices took a dump. And if you remember, if we get this C leg down, then that would mean the financial sector is going to be under pressure, because that's what happened on this leg. So I imagine it'll be the same scenario, risk off type move. Now the surprise would be if P keeps extending, and it can do that. It could even make a new high and make a flat. So we'll have to wait and see what happens. I don't think the bottom is here because of how it bottomed. Again, I don't think that's the bottom. I think this connector can rally, but at some point we'll get this leg, and then it will find a major low. And unfortunately, for those who think interest rates are done going up, they're not. We have an impulse off the bottom. It's clear impulse off the bottom with divergent top. We're just correcting the cycle. When that's done, we need another swing higher. Even if this is a massive corrective structure off of the all-time low, we still need a swing. So unfortunately, we're going to be facing higher rates. So higher rates, is it because of inflation or because of government stress, government failure to pay back money? It could be that, or a combination of both. But this is where the 2-year is going to eventually head to people's disbelief, and that's just the way the charts are reading to me. The dollar index, right now, been going back and forth. I'm looking now for something like this, higher, and this makes sense if China's going to sell off more, and then we have another low in the dollar, not that low, something like that. The finish, just corrective structure. So that's what I'm thinking now, but it's really, really tricky. The dollar is really tricky to forecast at the moment. But if you notice, the dollar dynamic that we saw on this rise isn't in play anymore. The dollar went down, but the markets went down. So what we're seeing is more or less when gold gets the markets. Essentially, it's a gold dynamic. As gold rises in price, the markets are selling off. As gold falls, the markets are saying support it. That's the correlation I'm seeing. So right now it looks like gold is due for a bounce, and then maybe another failure. So the markets could sell off, another rise higher, and then the markets peak, and gold could be in a 1, 2, and then you get 3 of 5, 4, 5, and then the markets find its final low. That's what this is kind of telling me based on the dynamics of the market right now. So we'll have to wait and see. And like I said, we are in the fifth wave of a major cycle, but this could extend. This could just be a 1, 2, 3, 4, 5. So this can extend. This doesn't have to be finished here. So that's why buying the dip in gold is still a smart trade in 3 waves. So here's 3, buy the dip. If we get another 3, buy the dip again, and so on, because I think it's a smart trade idea, and it seems like a good way to hedge long positions given the dynamic I'm seeing at the moment with gold higher, markets lower. All right, commodities, yeah, not you gotta be patient. I'm not playing the commodities. Yeah, we're bouncing in B. No surprise. This will fail. We'll come back down. Then I'll be a major buyer in the oil markets. But right now, nothing. And then oil, like I mentioned before, still want to see that bounce. Probably did this first 1, 2 here. Still want to see a little bit higher. So I do think there's a relief rally in energy. Maybe the Dow cyclical complex, while technology takes a breather, and then that's it. Then all hell breaks loose. Of course, it could, this could be done here. I don't think it is. This looks like even 5 up now from this bottom, so I'm still sticking to what I have here. But yeah, commodities to me are weak. They're weak. OIH is weak here. Not interest. Looks like that's finished a full impulse down. Yep. Down. So this is just a major low like that. So it probably could still bounce more, but look for lower. Yeah, GDX, again, I was aggressive in that dip buy here, and I think that low could be in. We'll have to wait and see. And then the SIL, the same thing. I was just aggressive here, buying it early. So again, I have a great entry here, like literally top, bottom tick both of those. And maybe I helped support the market because I did get a good chunk of change of this. Now I'm going to hold it. I want to see a bounce, and then I'll decide if, I'm going to take the scalp easy money or just play for a bigger pump. I don't know yet how I'm gonna, but I feel like I have a good a tradable pivot here at the moment. As you can see on the 4-hour, no divergence here, no divergence at that low. So if we were to come back and swing lower, then it changes the structure for me. So I do like it. Trade, I gave you this trade idea. Nothing else interests me anywhere in here. And then discretionary, I was looking at Crocs. Looks like that B is done here, heading down in C. We'll like to buy that dip when we get there. Could be 78. And let's see if there's anything else here that I want to mention. Wingstop's doing pretty well. Should be done this 4-wave, ready for 5. And again, if you've been following me, I gave you Wingstop at 180. Not bad. And I believe this is in all-time highs, blue skies territory. So this is just going to continue to be bullish. If it decides to take a dump down into this area, it'd be a great opportunity to go long. But right now, I wouldn't buy it right here at the moment if you're not in it. Then consumer staples, CLH. Like I said, should be in this 4-wave. Should get this 5th wave, and then a pretty nasty pullback, which is a great buyable opportunity. More than likely, that gap will fill on that pullback and get in if you miss this move. Everyone's FOMOing about Costco. Costco looks like some kind of elaborate, some kind of triangle or something. I'd be really careful in Costco, but do what's best for you. I'm not FOMOing in Costco. But if Costco can take a dump where I have it, awesome opportunity. If this is turned out to be some kind of triangle or whatever, and I may be labeled off, and we get this dump down to like 320, great opportunity for getting in on this staple. Okay, so then crypto. Again, I want to see I want to see these go lower before I start to buy them. I want to see GBTC in $13, $12 area, and it will. I think it. I mean, I look at this. It just needs a dump. It needs that capitulation dump, and all these do. Mara starting to head lower. MicroStrategy low. Yeah, just being patient. So crypto, it's not time yet. And then yeah, again, I'm mentioning KWeb here. KWeb. Not you can't really be aggressive with the China technology sector until you're down into this area. And if this is C, which I think it is, you're only done the first wave, right? So you got a bigger drop coming. Then yeah, financials still tricky. Schwab finding resistance at this descending triangle. It'll be interesting to see if that plays out. Not interested in these battleground stocks. Healthcare, it's weak. Not interested. I want to see it go lower. I've got my eye on certain stocks, Danaher, AbbVie, just not there. Then, technology, of course, everyone's favorite. Okay, so here we are with AI, making the separation in wave 3, no divergence. So this is the moment of truth. We need a 5th wave here to confirm the low is in. If we don't get it, it could be a connector for this move, and then we could go to $12. So tough to say where this will go, but it's a moment of truth. It needs that push higher. Tesla showed you this C leg. The C leg should be finishing up. So if you're like, ooh, I want to short Tesla, this is an idea. Again, short at your own risk, but it would be like 186, 191. There. That's a short area. AMD making new highs. People are like, oh, it's going to go like NVIDIA. So let's really analyze AMD. So here's the primary trend line, hasn't broke. So that's the primary cycle. Okay, so the next cycle is this, it broke. So okay, so we do know that that this cycle is completed, right? So you have some kind of 1, 2 here. Now the question is this a 3, 4 or not? So we still have divergence, but we want to see the higher time frames. Here you still have divergence. So I would label it probably like this for now. 3, a 4, and some kind of 5th wave. Okay, and then the short area would be at 107 to 115, right where it is now. So we'll see if it can extend. It looks like it's this is where it should fail. Now, if we look at closer at the we zoom in. Here's a cycle, 1, 2. There's your 3, 4. So you still need like one more marginal high to finish that cycle. 1, 2, 3, 4, 5, something like that. So you could see a drop in 4, another dip lower, but don't be surprised if that's supported and purchased by dip buyers. So 102, 100 here, and then you get the final wave higher here, like that, for the final top. So we could do something like that. Now, of course, 4 can already be done. May already be done. We don't know yet. So that just gives you analysis of AMD. And now that we're 5 up, so could it be a bearish structure and go to new lows? I could have to force a flat structure, right? I would have to say that this this is like here like an A, B, C, and it just doesn't seem, that looks very impulsive. not three waves to me. We have divergence. So it doesn't seem like likely. So it looks like to me AMD is low as in, and then this will come back more than likely between the 4 and the 2, typically between 73 when it pulls back, and the market should be trading at SPY 300 or lower when that happens. Something like this. So this is what's in store for the market, guys, what I just drew up here. But I do think that this low will hold technically now. Something like that is what's in store, because this trend line needs to break. The one here, well, that side, this will have to break. So this should break and then finish. So this is like a, this is my analysis on AMD, NVIDIA, divergence. Again, it's a wave 5 blow off top, but it still needs a 4 and a 5. I mean, you can look at it and see it's not quite done yet. Massive wedge. Look at that wedge. And yes, it will fail. Like, it will fail. Now here, again, we have 5 up the bottom. 8 more than likely will hold its low. So what does this semiconductor say about the overall bull market in general? For the overall market, it shows it's supported. It shows, yes, the indices are going to go down hard, right? The SPY is going to go down hard here, like I have here, but it's going to be supported. And then we could rally back up to new highs. It doesn't support, right? It doesn't support that, right? This scenario, the 2009 scenario, the South Sea bubble scenario. It supports something like this. So what AMD and NVIDIA and the AI bubble is telling you is the grand super cycle, well, it should come to an end, may not, in least technology sector. And maybe the cyclicals will diverge, but here, this dump probably will be supported for new highs, or the other option is we get this dump here and we bounce, right? Because we should bounce here like that, and then we get the South Sea bubble collapse. And what that would look like would be, if we go back to NVIDIA, that would look like, okay, we come down in 3 like this, then we come back up in 5, right? Read that. And then now you have a corrective structure, an A, a B, and then you can have C. And then you have your C leg down. You see? So maybe we're waiting for 2024 election time for the real collapse. But this drop here is coming. This is the one. Now, what happens after that is anyone's guess. And I do think if you believe in the South Sea bubble, style crash of the indices, I believe this is the look it will take, like I have here, where you come down here to 280, is this area, somewhere in this area. You have a healthy bounce into, maybe into the election time period, and then post-election, all hell breaks loose, and that's the end. So that's how I believe the indices would meet their demise, is something like this. I don't think it's just going to be like that because of stocks like AMD, NVIDIA, Apple, because their swings are 5 up off the lows. Okay, so it's more than likely this is, so if you're an uber bear, this is what you need to think about. Drop, massive bounce, super crash. Everyone here, I'm sure, will think the bull market is ready to go. Even the Elliott wave guys with the 3 down. So this will trap a lot of people right here. So just keep that in mind. This is a bigger picture. So that's let's just kind of flip through technology to see if there's anything else that is interesting that we need to worry about. Okay, Netflix is another moment of truth. Can it break 380? If it can't, it could be a massive bull trap in 1-2. We'll have to wait and see. If it can break this, it's super bullish, uber bullish. Earnings, not for a while. Microsoft, again, it's in the short area, but it needs that final 4 and 5. Most of the indices in tech need a final 4 and 5. But you're really playing with fire, trying to go long here. Let's see. A lot of weakness in these e-commerce plays. Wayfair still holding the low here. Interesting. Trade Desk. Looks like double top tier. We'll wait and see how that plays out. If that's still in this fifth wave and an A, B, C. I'll have to wait and see. Always like this one. Still only corrective. If we can make another high, that would be positive, and confirm the low is in Magnite. If not, it's just a connector. And let's check Airbnb. Okay, you could try to dip by that at 95. Not there yet. Zimmer. It's finding support. It could come out of here and surprise people to the upside. I would say very dangerous because that whole sector is not very bullish and in favor with investors. So I wouldn't take the trade, but there's a possibility. Small time semi-wolf. I do like one more swing down. Hopefully get that. Yeah, see, let's go to the green. So like Plug Power, yeah, just tough sledding for that company. And phase should be continuing lower, struggling for solar. As you can see, the flat is playing out. I warned you guys about this. This did not look like a breakout. This looked like a fake out. And now, if this plays out just like I have it here, this is like a pound the table buy at 154. I will be definitely loading up here in this area, because typically a flat correction is an extension. It tells you in the bigger picture you're going to go higher. This is just a lot of day traders, mom and pop 401k investors have no idea what the hell's going on. They panic out of this, and then they're like so confused. But this is market maker games. This is like, big whales, playing games here. Matt, look at the pump, and then it's just classic. So I would just say if we can get this, great opportunity here presenting itself for First Solar right here, right where I've got this. But I won't here. No, it's gambling. Could it still go up? Sure, I could be wrong and do what's best for you, but I'm going to be more patient. How's RK doing? Hasn't taken that high I have here. That'd be more bullish if it did, and that would be an interesting break. But right now it's still struggling. Of course, I mentioned China. If China keeps going down, PDD will continue to go lower. It could hit this downtrend line. Be careful. All these stocks could still make another swing lower. So just keep that in mind. The K-Web, we really need this K-Web in this area to feel safer about where that's going. Okay, so that's the market update, guys. The market is in the final stages before a massive drop. Hard to say the news. Could be debt ceiling, could be something else. I do think if you really look at the bigger picture, though, when this decline does finish, there'll be a really healthy bounce, especially in technology. And then you have to place your bets sometime at the end of 24. You're going to get the South Sea bubble collapse of the ages, or are you going to get new all-time highs? It'll be a very interesting time, but that's right around election time. But I do think it looks like we've got some dark times coming this summer. I think the summer of misery is going to be here in the markets, maybe with the crescendo in the fall, the crescendo crash, We start just grinding lower, and then we have the waterfall sell off September, October, and then this thing finally finds a low at some point in mid-October. But I mean, the point is, dark times are coming in the market. The euphoria that we have right now in technology is going to come to an abrupt end, and then a lot of investors are going to be caught holding the bag and then selling at the wrong possible time as we break, I believe, the October lows in both indices, which will be unthinkable given how far and how high things have come recently. All right, guys, that's it. That's all I got.